Good morning, everyone. This is Bag of Dawn at StockMarketCaddy.com. It is February 25th at about 10 a.m. Wanted to share, do a little public service announcement for folks. We usually do these on occasion midday. Our subscribers are getting emails and videos. Well, they get videos each and every night. But when we see a significant change in the markets, we are quick to get the word out to them. We also want to share with everyone else what we are seeing, so real time. The volatility index this morning, we mentioned this yesterday actually, that the volatility index, the VIX, was not confirming. All these positions really should be in a short mode, confirming the long mode on the indices, and they were not. And we're seeing the hint of a breakout on the 1 hour. Hasn't done it yet. Would be looking for the VIX to go long here, and so time will tell. We think this is going to be an important day. We are seeing on the 1 hour time frame the short signals, and we mentioned yesterday that we were getting short in anticipation of the other hints that we were getting, that the one and the potentially the 2 hour system was going to be getting into a short mode, and we're seeing that now. The excuse me. We think the Nasdaq is going to be the ripest, despite what Tesla is doing. We think that is the amateur hour over there. Pay attention to what the overall market is doing. They'll get them all in the end, folks. But we're seeing some good weakness in the Nasdaq. Sorry, we're getting over a bit of a cold. But what I wanted to bring your attention to is this little ditty right here: the yen. The yen. The yen on a 1 hour basis is long. 240 is about to be going long. Daily is long. And we have the hint on the larger time frames of a stall. This is not good for the bulls. The yen and the dollar have told a huge story. What folks have been doing, they talk about the yen carry trade. Basically, what folks do is they borrow the yen, or they short the yen. They then take those profits and buy risky assets in our markets all over the world. It's what they call the yen carry trade. Well, the yen carry trade is huge, huge. It has been really the driving force since the yen collapsed from a buck 28, more than a year and a half ago. Heavy, heavy, massive short position. What happened over last night, it's becoming evident that the Chinese yuan has appears to have had some intervention in the last week, and the Chinese yuan versus the dollar has been weakened by as much as 2 to 3%. We think this could be upsetting the apple cart on this yen carry trade, a bit of a currency war, and that could have a spillover into the markets. If the yen strengthens and you are short or you are borrowed against the yen, then you need to begin to think about unwinding some of your speculative assets. And it can really feed on itself, so be careful or be aware of this. If this yen continues strong, and if you're bearish, you want that yen to strengthen, and if it does, it could really compound itself. And we want to come down and look at what the bonds are doing. This is the 10-year bond, and we can see that excuse me, the bond is actually rising, which means interest rates are dropping on an hourly basis, and same with the U.S. actually looking long. That would be defensive, folks. So we are in a defensive posture. We are taking short positions, and we're once again, excuse me, trying to hammer on these long positions on the daily and weekly and see just how real they are. We'll see. I think today's going to be an important day, folks, so buckle up.